Shares of Tesla and Apple rise as both companies began trading on a split-adjusted basis today. Tesla's 5-for-1 and Apple's 4-for-1 stock splits both went into effect at the start of trade this morning. The decision to split the stock comes as Tesla shares rose to more than $2,000 apiece before this move, while Apple became the first publicly traded company with a market valuation of more than $2 trillion. Shares of both companies have surged in recent weeks along with the broader tech sector. Let's take a look at where both companies closed today. You can see Tesla rising more than 12% and up to nearly $500 a share, with Apple settling more than 4% higher in today's session. Well, for more on what those stock splits mean and how they impact the broader market, I do want to bring in the chairman and managing member of Great Hill Capital, LLC, Thomas Hayes, to talk more about what this means. Hi, Tom. Thanks so much for joining us today.
Thanks for having me, Greta.
People like you and I, of course, understand what a stock split means and the goal of making such a move. But for our viewers at home who might not, explain the strategy and how it will impact the market overall.
Yeah, so the change in the Dow today, Greta, was attributable to the 4-for-1 split of Apple. And what that effectively did to the Dow Jones is it took the tech weighting from 27.6% down to 20.73%. And in order to take that back up, they needed another tech stock. So they put Salesforce in its place, taking the tech weighting up to 23.1. So how the split works is very simple. Think of if you have a $5 bill. If I give you 5 singles in exchange for that $5 bill, does that make you any wealthier? And the answer is no. In the short term, retail traders think that they're getting at a lower price, but fundamentally they have the same value, the same percentage ownership in the company.
When we look at a company like Tesla splitting 5-for-1, a $2,000 stock now becomes worth about $400 to $500. Does that at all, incentivize investors to buy into that stock more, make it easier for investors to do so?
In the short term, it has that effect on retail traders. Institutions value the company overall, and that's not going to affect their decisions. Actually, the last few times Apple did a split, if you look at the statistics, on average in the next 2 weeks, the stock actually went down 5.5%. So I wouldn't make your decision on Apple on the basis of the price based on the post-split. I'd make it on the basis of the fundamentals. Now, the fundamentals, Greta, if you look in the last 60 days, the earnings estimates for Apple have gone up 4.4% for 2021, but the stock price has gone up 45%, and it's up about 75% for the year. So some people are saying that the market looks toppy. I think it's nuanced. Certain pockets of the market might be a little bit ahead of themselves, but you could certainly get a rotation into those sectors and stocks that have yet to perform coming out of the rebound.
I'm mentioning those sectors of the stocks that have not performed that well yet. We have seen, of course, a major surge in tech stocks lately. Why are the current economic conditions more favorable to tech, and when could you expect to see a shift in the market?
Yeah, the conditions are favorable. You've got a low rate environment, number one. And until we get that vaccine or silver bullet treatment, which may be imminent in the next couple of months, the tech stocks do well because they perform in slower growth environments, lower growth expected environments, because managers have to pay up for what little growth there is. Once you get the vaccine and you get that cyclical rotation, you get that strong economic growth, then you're going to have lots of choices where you can get growth. And that's where you're going to see some of the old world sectors, banks for sure, defense stocks, industrials, and possibly even energy once you get the galloping growth and we return to normalcy after a vaccine. So that's really the catalyst we're looking for. I think tech may be due for a breather in coming weeks or coming months as the market steadies at these levels, and some of the ones that have been left behind can start to participate and really move.
All right, Thomas Hayes, chairman of Great Hill Capital, LLC, joining us to talk about the latest changes on Wall Street amid that recent surge in the tech sector. Thanks so much for coming on the show today.
Thanks for having me, Greta.
Want to see more videos like this? Click on the link below and subscribe to One American News on YouTube, and call your cable provider and kindly demand that One American News is added to your lineup. Call and subscribe today.